Hey guys, so as expected, the Federal Reserve announced another 25 basis point interest rate hike on Wednesday, making the benchmark rate the highest it's been since 2007. The ninth consecutive rate hike is meant to discourage inflation by increasing the cost of borrowing, which can slow the economy and possibly trigger a recession. In turn, it increases the growing cost of credit cards, out of financing and other loans. With the move, the central bank has increased the federal funds rate from nearly zero in March 2022 to a range of 4.75 to 5%. There was some speculation that the Fed might pause interest rate hikes in response to recent banking failures, including Silicon Valley Bank. However, Federal Reserve's Chair Jerome Powell has repeatedly said that price stability is the central bank's main focus. However, may this Fed's policy influence the worst-case scenario of stagflation? Let's find out. But before this video, guys, please like this video and subscribe to my channel, as it keeps me motivated to create these videos for you guys. So let's start from the basics. What is stagflation? Stagflation is an economic cycle characterized by slow economic growth, a recession, high unemployment rate, and high inflation. Economic policymakers find this combination particularly difficult to handle, as attempting to correct one of the factors can influence another. In mid-2022, many were saying that the United States had not entered a period of stagflation, but might soon experience one, at least for a short period. In June 2022, Forbes magazine argued that the period of stagflation was likely because economic policymakers would tackle unemployment first, leaving inflation to be dealt with later. The rate of inflation has slowed to 6%, but is still above the Fed's preferred rate of 2%, and it seems that Fed is not doing a very good job handling the inflation, as we already see banks as Silicon Valley Bank and Credit Suisse failing. Rate hikes are often referred to as a blunt instrument because they affect the entire financial system. The effects are very hard to measure, since it can take many months to a rate hike to be fully absorbed by the economy. Since each rate hike adds to the risk of a recession, the Fed has slowed its increases somewhat, opting for 25 basis point hikes in February and March instead of the 75 basis point increases it enacted in the late 2022. Despite the Fed slowing its roll, Powell has repeatedly said inflation remains a top priority. Now, why is stagflation bad? As I said, stagflation is a combination of three negatives: slower economic growth, higher unemployment, and higher prices. This is a combination that isn't supposed to occur in the logic of economics. Price shouldn't go up when people have less money to spend. So what is the cure for stagflation? There is no definitive cure for stagflation. The consensus among economists is that productivity has to be increased to the point where it will lead to higher growth without additional inflation. This would then allow for the tightening of monetary policy to rein in the inflation component of stagflation. That is easier said than done. So the key to preventing stagflation is for economic policymakers to be extremely proactive in avoiding it in the first place. However, once COVID hit, a lot of people started working from home, and as we all know, working from home is not as productive as employees operating from office usually get more done. That's one of the reasons why inflation rose to such highs, as a lot of people were working from home during COVID, and maybe this will be the solution for future stagflation, for everybody to go back to office, as this will increase productivity. What do you guys think about this? Should Fed continue raising rates to beat inflation and risk stagflation? Leave your comments down below. So guys, if you like this video, please press thumbs up and subscribe to my channel. Your likes keep me motivated to create these videos for you guys. Thank you for watching, and see you in the next video.